Good evening, everybody. Today's April 4th. I'm Michael Sylvia. You're watching the Stock Market Brief Show, where we navigate these financial markets through the lens of technical and intermarket analysis. Today, we had a big reversal, a reversal that we really haven't seen, a big red candle like this that we haven't seen for quite some time. You have to go back a lot. And it was also on big volume, so this is considered a distribution type day. Is it going to turn into something bigger? We'll talk about that. We'll talk about some key levels here because it's a time to put your confidence to the side and really get strategic and tactical. If we take a look at Trade the News platform, you'll see here there's a couple of red dots leading into this sell-off. And this is telling us when big headlines hit. And it just so happens right here going into the sell-off, what caused it? We get these narratives. It could be very well because some news from a geopolitical perspective, Iran, and this also affected various defense stocks like Lockheed Martin, like NOC, a couple other ones there too as well, RTX. And then a little bit further down here that created even more volatility as well was we had more Fed speakers. So if I pull up the S&P 500 on the 15-minute time frame, we actually started outside of that daily expected move today, saw some follow through back up to the upside to get a new high, and then that's when that news kicked in and we saw just a massive slam there in the price action and a huge rip in volatility. Now, not only did we start the day outside of the daily expected move upper level, we closed outside of the lower daily, and we're getting now a new daily expected move I want to cover, and we're outside of that weekly expected move. For those that don't know, these moves aren't just drawn on the screen. They're not my expectations. They're what the options market price in as far as implied volatility. And what I find so crazy here is if you just look at the range for this day, it's darn near the size of the entire risk range there for what we started at the week. I pulled up the SPX. This is the weekly expected move. I share this with the Discord every week. You can see the expected move was $58, and we've exceeded that, getting outside of that level. And now the daily expected move is $55 for the SPX for one single trading day. This is telling us that, hey, volatility is here. Buckle up, be careful, and just respond accordingly and manage risk appropriately. Now, going into tomorrow, it could be also that we have some non-farm data. Now, like I said, there was geopolitical events that really kicked this sell-off into high gear. But there was a note from some of the Hedgeye group, and they had mentioned and shown the Israel Sovereign CDS and basically said that they're yawning at this ceasefire news headline. So this could be a nothing burger according to this. We'll see what happens within the price action. But remember, there's a higher probability that we do come back up within the weekly expected move, right? 68% of the time, price closes within what the market price and his risk. And this is a pretty heavy sell-off, right? So are we going to get some sort of a bounce? Typically, when we close at the low, you can see the low, you can see it, go lower into the following day. So potentially look for a reversal. Okay. Other things that I typically see when we see these large days are gap ups and just inside trading days. And then it kind of, people forget about what's been going on, volume dries up, and then price action coils, contracts, and makes its move after that fact, right? If we zoom out a little bit, I know a lot of people are going to be saying, hey, look at the trend line. The trend line cracked, it broke, it did so on some big volume. I'd say I'd agree with that, but right now, as it stands, I mean, we just look back to the left of the screen, and it's really no real uptrend has been substantially broken. I think this could mark the beginning of potentially something. What would negate that is if we start breaking the high of this candle and this candle and this candle right there. We take a look at the 11 sectors that make up the S&P 500. One to call out is energy was the top performer. And this has been giving us some insight. If you look at things like oil, right? Oil's been on a monster rip, and we know the correlation there because we talk about it heavily with energy stocks. And then we talked about, hey, if energy is going to outperform the SPY, which it very well did. You look at the SPY, it was down 1.12%. Energy was unchanged on the day. This means that the relative performance of energy went up relative to the SPY, and that has not been a good situation for the markets, right? Energy goes up, and even if you look back through history, rising prices in oil, rapid rates of change in the price of oil have caused many different issues, not only in markets, but from a geopolitical perspective as well. You can take a look at gold, and gold also has been making this monster move, trying to signal or tell us something, and we get our narratives later down the road. But, before the narratives come out, we can potentially look at these intermarket assets and say, hey, is something big going on? And that's what really gives off these warning signs to us. Speaking of warning signs, we talked about be prepared for something here on March 4th. We called this our big warning. If you go back and watch that video, you'll notice I say it's not what you think, but it is coming to a period where we can see much more volatility. And we talked about gamma exposure levels. The gamma exposure levels now, right? We have the call wall of 5,300 and 5,250 was the magnet we had discussed on today's live. Currently, what we said was if it's above it and you want to be bullish above that 5,250. But if it gets below it, there's not much anything beneath us to see a strong move, and we came all the way down coming into 5150. Below that, 5100, below that, we have a put wall of 5,000 that is starting to grow. And you can see that magnet here, right at 5250. This is 5250. I bring it across the screen. You can see it's been trying to break free from the level. Well, it finally did so today. By break free, I mean breaking from the 5250. So it can hold and hold and hold, and it breaks and comes back. It breaks up, it comes back. Oh, it drops, but then it comes back in, right? And now we're in negative gamma territory. We made a substantial break of 5250. We're below the 5-day moving average. This is the time to be more cautious. It's a time to be more tactical. So be careful out there. If we start to see a rip up and we hit the upper daily expected move and come back within the weekly, I mean, that makes sense. That would just be a 50% retracement of that move. Does that mean we're clear and saved? No, we'd still be below the month-to-date anchored VWAP, and we'd be below a falling, now declining 5-day moving average. That's all I got for you on today's episode, everybody. Hope it helps out. I'll try to be live here tomorrow again as well. See you later.